Let's get more now on the market moves, and I want to bring in Caleb Silver. He's the editor-in-chief at Investopedia. He joins us live now. Caleb, great to have you with us.
Great to be with you. Happy holidays to you.
Happy holidays to you. So we did see the market rally into the holidays. We are seeing red arrows across the board today. Is this an indicator of how the year is going to finish up? What are you thinking? Is the Santa Claus rally going to gain more steam before the year is finished?
We love the Santa Claus rally and all the indicators from Yale Hirsch and Jeff Hirsch at the Stock Traders Almanac. It's an indicator, so it's not 100% accurate, and it shouldn't mean much. Investors should be very grateful for the year we've had. The S&P 500 up 26%. Very rare, as you know, Allison, to get back-to-back years of 20% plus gains. Very rare to get 3 of those years in a row. The last time we had it was during the internet boom. So I don't think this is that. We got very thin trading, not a lot of tradable information and reports coming out. Very thin economic week in terms of releases and reports. So not a lot of catalysts right now. So trading is thin. And the fact that the S&P and the markets are a little bit lower going into the end of the year, not a big deal considering the big gain. Now, sometimes you see a lot of window dressing this time of year, portfolio managers trying to add positions to catch up for the positions they didn't add going into the last quarter. Sometimes you see that, but everybody's been so long, the big, large tech stocks, the big Nvidias of the world, the Apples of the world, poised to become a $4 trillion company, that I don't think you should make too much of the fact that stocks are a little bit soft going into the final days of the year, but we still have a few days in the Santa Claus rally to see if that plays out.
All right, let's talk about the Federal Reserve a bit, because the Fed did cause a little bit of surprise to the market by kind of throwing caution to the wind here about how many rate hikes that it would make. Inflation's still sticky, so many would say the Fed is proceeding as it should. What can we expect from the Fed as far as, next year?
Yeah, very interesting. We went into this year thinking we would get 6 quarter-point rate cuts in 2025. Now, if you look at Fed Fund Futures and the CME's Fed Watch tool, there's only one out there that's forecast, another quarter-point cut, and then we might be at what we call the terminal rate. That could be where rates are stuck for a little bit of time, 3.75% to 4%. That's still relatively low considering where we have been, but we waited throughout 2024 for rate cuts and for a recession to come. We didn't get the recession, we got the rate cuts, and we got a slowing of inflation. Going into next year, inflation's still the number, and there's not a lot that can be done about it. Prices are high where we have to spend money, right? Groceries, shelter, transportation costs, medical care costs, insurance. We have to pay those costs. Those prices aren't coming down. So we're going to be dealing with inflation and then possibly the potential impact of inflation if there are tariffs. That could be more bark than bite. So the Fed is going to be in this weird position. And when you heard Fed Chair Powell's conference the other day, they're not talking too much about next year because they don't know too much about next year and the economic policies from the Trump administration. We do know that Trump has said that Powell can keep his job. He's got another year plus on that term. So it's going to be a fascinating year to watch the Fed meetings and to see what happens within the Federal Reserve. And then you got a lot of new outside influences on economic policy, including the Doge crew, the Department of Government Efficiency, a new Treasury Secretary, and a new Commerce Secretary. 2025 is going to be totally fascinating.
Yeah, I mean, we did see exuberance in the market when President-elect Trump was elected again back to the White House. Are we expecting to see that kind of exuberance continue into 2025?
Well, it's about showing investors the numbers. They want to see what the policies actually look like. We do know there's going to be a lot less regulation, so that means more deal making. We do know that there's going to be a lot more crypto enthusiasm. That means much more risk on the table. Think about the unicorn IPOs we might see out of the crypto community. Think about some of the new meme coins that could come into our existence because it's such a crypto-friendly administration. But basically, the message to investors is risk is back on the menu. Green lights for deal making, green lights for mergers and acquisitions, green lights for risky behavior in the crypto sector that usually translates well to stocks. But as you've noticed in the past few weeks, we've had this sort of softness in the Dow Industrials, a lot of softness in the value part of the market, and the big tech stocks and the big growth stocks have been in the driver's seat again. That's what brought us all these gains from the past couple of years. I think we can expect that. We're going to see some $4 trillion companies in 2025. The big get bigger, and individual investors like to gravitate towards the big stocks, the big ETFs, and the big index funds. So I expect more gains. I don't know if we'll see 20% plus, but I do expect more enthusiasm.
Okay, but we can flip the coin here. When you consider Trump's impact on the economy, what do you see could go wrong in the stock market in 2025?
I think investors could stop believing that this thing can just continue to go on forever and that we're going to see all this growth. A lot of the growth and a lot of the performance in the stock market last year and the year before was the AI enthusiasm, the build out, right? The NVIDIAs of the world who are laying the tracks, building the chips, powering the data centers. 2025 is going to be a show me moment for a lot of the companies using AI. We're talking about the Microsofts, Amazons, Apples, and Alphabets of the world that have been spending billions of dollars to build out AI. It's a zero-sum game. 2025 is going to be the show me. Are you actually increasing your profit margins? Are you increasing your profitability because you're using AI? And then we have quantum AI. That's going to be the next new thing that gets investors enthusiastic. We've already seen stocks in that sector. Little micro caps and small cap stocks bang up 1,000%, 500% just on the enthusiasm for quantum AI. I expect to see that be a big theme in 2025.
All right, Caleb Silver, editor-in-chief at Investopedia. So great getting your expertise, and we're going to bring you back on the show in a little bit to get more.
Thank you.